Financial service sector as such has various components, but if one were to focus primarily on the lending institutions, then clearly it's well known that the issues that are currently faced by the industry are all around NPAs or the bad loans, non-performing assets. So if I can divide the discussion into two components, one around the regulatory framework or policy changes and another one around tax issues. So to begin with, on the policy change, it's clearly well known that looking at the size of the bad loans or NPAs, which is over 8 lakh crores on an all India basis, it clearly requires some serious efforts to resolve these the NPAs. One area which requires attention is the enhanced role of asset reconstruction companies. Today, currently the ARCs cover only 1/3 of the aggregate size of NPAs in the market, which means that only 1/3 are addressed or processed through ARCs and the rest have to be handled directly. The expert committee has recommended a few suggestions, out of which I consider two to be very, very important in terms of changes in the policy framework to make ARCs much more stronger. One is to increase the minimum capital requirement from 100 crores to 200 crores, and second is to enable ARCs to be the applicants in the IBC process. So these two changes are very important, and among various other changes that are made by the committee, these two changes will clearly make the role of ARC much more stronger, and along with the capital that ARCs attract from various investors, they will be in a position to play a bigger role. Coming to the tax issues, it's very well known that NBFCs also play a crucial role in the entire lending business. Today, RBI has tightened the entire regulatory framework for NBFCs, and therefore they are treated almost at par with banks. Unfortunately, the tax regime has not kept pace. So I will touch upon 4 or 5 issues which NBFC sector has been demanding as such, and they are well known and they need addressing immediately. When NBFCs accrue interest on NPAs, they are taxed the moment they are accrued in books of accounts. A couple of years ago, a provision was brought in the law which, like banks, provided that interest on NPAs will be taxed only on receipt basis or on accrual in books of accounts, whichever was earlier. But the situation is that because of accounting standards, NBFCs have to accrue interest, especially the large NBFCs, and therefore they end up paying tax on interest which is accrued even if it's not received, or when the chances of collection are slim. Therefore, there should be a provision that the NBFC should be taxed on interest on NPA only on actual receipt basis. The third issue is that when NBFCs try to recover loans by sale of security property, which is a real estate, then the buyer deducts tax on that because typically the deduction of tax happens in the name of the original owner of the property, which is the borrower. But that also means that the seller NBFC does not get credit for tax, so there is a short collection to that extent. So therefore, the ideal situation would be that such transactions are exempted from TDS, so that the lender NBFC makes a full recovery rather than net of TDS. The next issue is that today the merger of banks is made tax neutral in such a fashion that the unabsorbed loss or depreciation can be carried forward for the merged entity, whereas this provision does not apply to NBFCs. And today it's very common for NBFCs merging. I mean, there's a consolidation happening. Loss-making NBFCs are merging into profit-making NBFCs. It's important that the brought forward losses allowed to be set off against the new merged entity. So these are the measures that will go a long way in making the NBFCs and the lending institutions stronger, and also in the long run resolve the NPA issue, which is the biggest issue faced by the bank.